Inventory keeps climbing as sellers across the country rush to the market and hope they haven't missed the boat on the crazy pandemic housing market. Rising inventory of unsold single-family homes has been the story of the month, and this week adds significantly to that trend. Let's see what the data says for the week of August 16, 2021. Each week, Altos Research tracks every home for sale in the country, all the pricing, supply and demand, all the changes in that data, and we make that available to you before you see it in the traditional data channels. And here's what this week looks like. Available inventory of unsold single-family homes rose 2.5% this week to 422,000 homes. If you watch the Altos data each week, you might recall that just like 3 weeks ago, I said I expected us to top out at maybe 400,000 homes. Inventory has blown past that prediction and continues to climb. Every week, conditions are improving for home buyers. So some things to note about the rising inventory levels. 2.5% in and of itself is actually not an alarming change. It's pretty common. Inventory is still 50% below normal. This week, interestingly, is finally the highest week of inventory for the entire year. Previously, the high was the first week of January. Normally, January is the low point of inventory for the year, but this year inventory kept declining all the way through March and April. So we're finally back above water. My friend Ryan Lundquist, an appraiser in Sacramento, said it this way: a car going 100 miles an hour down the freeway, you take your foot off the gas, is rapidly decelerating, but it's still going really, really fast. Both of those things can be true at the same time. And that's the right way to look at it. Given that our inventory low point was not until April 30th, and that the market is shifting, you can actually see a scenario where inventory doesn't peak in 2021 until maybe October this year. So does that peak at 450, 500,000 homes? Well, you can see the chart here. Normally, the third quarter inventory is actually flat and then starts to decline in November. We could keep climbing through the third quarter. That means if you're a home buyer, you might see opportunities opening up this fall that just a few months ago felt like they were gone forever. You can see the demand shift also in the percent of homes taking price reductions. Always this time of year, price reductions kick in on those homes that didn't sell in the summer. Normally, we would end the year at maybe 35% or more price reductions. It's now looking likely that the market this year is going to reset into that old normal cycle. You can see it very clearly here over the years. We're up to 25.4% of homes on the market with price reductions. That's climbing by about 1% a week. And so you can see how we'd get back to normal by the holidays. In fact, in last week's webinar, I pointed out Boise, Idaho. Boise is one of the craziest markets this year. Many locals were like happy to sell to all the inbound Californians at these inflated prices. But what we can see is that there is clearly a limit to that overpricing. So Boise is now at 41.5% of the active market with price reductions. So that's normal for Boise this time of year, but Boise was at only 5% earlier this spring. So this is not prices falling for Boise. This is the rocket ship has landed. Our immediate sales tracker reinforces this foot off the gas metaphor also. So we're still at 21,000 homes that listed and sold in hours or just days, like essentially immediately. Each week, though, slightly fewer are immediate sales. We have a long way to go before this is in any way bearish. 21% of the 100,000 new listings went immediately this week. Okay, let's wrap with home prices today. The median price of a single family home in the US this week is just under $391,000. This is another downtick from $394,000 last week. Annual gains are compressing. We're looking at 10% year over year gains at this point. Last fall and winter were so strong that the annual comparisons the rest of the year, as 2021 is more seasonal, the annual gains will compress as we get through the rest of the year. The median price of the newly listed cohort, that's the light colored line on this chart, is unchanged this week at $355,000. You can see each year at this time, the price of new listings is pretty stable. Sellers have adjusted to fall demand. And so we should expect that this stays largely unchanged through November of this year. In fact, you can see each year a little bump in October actually happens. There's a little bit more selling activity that jumps up in October after we've past the beginning of the school year. So we're going to keep our eye out for that this year in a couple of months as well. Okay, so that's the data for the week. Inventory continues to surprise to the upside. Sellers are trying to take advantage of a hot market. Did they wait too long? Well, if they did, you'll see it here first. By the way, if you missed the August webinar last week, you can find the replay on the YouTube channel. You can also get the replay when you connect with the team at Altos. Go to altosresearch.com, book a demo, look at your local data, start planning how you are going to use that data to help your buyers and sellers see through the changing market. And you'll get a link to the webinar where we talked all the details last week, so don't miss it. All right. Thank you. More next week.